Hey everyone, welcome to my channel and welcome back to my subscribers. This is where we talk about money, saving, and how to secure yourself in an insecure world. This is Bald Guy Money. I'm Bald Guy. Let's talk money. So today we're going to talk about Bitcoin. Precisely the main reason why I am buying Bitcoin right now. And there will be some price predictions in this video, so be sure please to watch to the very end to get the most out of it. Before we get into it, just a reminder, this is not financial advice. This is an informational video. The better informed you are, the better decisions you can make about your personal finances. And none of this is political. I use facts and I apply logic and use math to make sense of what's happening around me. Nothing more, nothing less. Okay, so Bitcoin. I am buying it. I won't let it pass me by anymore. And there are many reasons why. But the main reason why I am buying it right now is that there are huge amounts of money about to come into Bitcoin that will change it forever. Not only will the price surge to new all-time highs over the next 18 months, in my opinion, but the level of volatility is going to go down. Now, if you've watched my earlier video on how I invest to beat inflation, you will have noticed that I mentioned a few investors by name. Investors that I keep an eye on. Now, I'm not talking about people on the fringes, quack investors. I mean billionaire hedge fund managers who manage massive amounts of their own and other people's money. Two such examples are Paul Tudor Jones and Ray Dalio. Between them, they manage around $100 billion in assets, and Paul Tudor Jones recently went on record in a CNBC interview and said this: I like Bitcoin as a portfolio diversifier. Everybody asks me, what should I do with my Bitcoin? The only thing I know for certain, I want 5% in gold, 5% in Bitcoin. And here's Ray Dalio, whose Bridgewater Associates is the largest hedge fund in the world. And he recently offered up these nuggets to CoinDesk during their Consensus 2021 conference. I have some Bitcoin. I'd rather have Bitcoin than a bond. Two different takes on Bitcoin. Seems to me that Paul Tudor Jones sees it as an engine for growth and a major engine for return on investment moving into the future, whereas Ray Dalio sees it as more of a way to protect yourself from inflation and replace bonds, which are not giving any returns right now. All that said, like one of my favorite YouTubers, James from Invest Answers, says, all roads lead to Bitcoin. And I think these examples adequately prove that no matter what your take is, whether you're looking for an engine for growth or just a hedge on inflation or something to replace bonds, Bitcoin is that alternative, and all roads lead to Bitcoin. By the way, I'm going to link up a link to James's channel below, so check him out if you want to. I highly recommend him. He's really good at what he does. Okay. So, this is really, really important to pay attention to. When you have major hedge fund managers talking about Bitcoin, it means you have to start crunching the numbers and ask what percentage of the approximately $3.2 trillion managed by hedge funds will land in Bitcoin and what impact that will have on its price. Stay with me, my prediction is coming up. The second leg of my huge amounts of money coming into Bitcoin comes from what are called ETFs, or exchange traded funds. Simply put, an ETF is much like a traditional mutual fund. You purchase shares of the ETF, and in turn the ETF takes your money and they purchase a basket of different stocks, commodities, and bonds, depending on how much risk you signed up for or what part of the market you signed up to focus on. Here it is illustrated in an example. You can see I've made an example of what an S&P 500 ETF might look like. Maybe you've got some Tesla, Apple, Microsoft, Johnson & Johnson stock all mixed up in there. And a commodities ETF, where maybe you have a little bit of gold, silver, oil. There are some ETFs that will buy both of these things. So you'll have ETFs that will buy you a little bit of these S&P 500 stocks and some commodities as well. And as you can imagine, there is a lot of money in these ETFs. In fact, when you compare to the $3.2 trillion managed by hedge funds, ETFs are more than twice that size, at a massive $7.7 trillion total invested in ETFs around the world as it stands today. And together they combine to become a $10.9 trillion wrecking ball, with the potential to send a stock or cryptocurrency to the moon in one trading day. Now, at this point in the video, you may be asking yourself, so if there's all this money that's keen on getting into Bitcoin, why haven't the people managing these funds bought Bitcoin yet? And that's a great question. So, as it stands today, there are hedge funds and ETFs that actively invest in Bitcoin. For example, in Canada, there are a few ETFs with almost $700 million in Bitcoin holdings as it stands today. Additionally, some hedge funds have also started to foray into Bitcoin, but only at a slow pace. And there are reasons for that, and it boils down to regulation, specifically in the USA. Now, why regulation in the USA is so important is easy to explain. Pull up the chart. Okay, here it is. As you can see on this chart, more than half of the total investment value on Earth today is in the United States of America. We're talking almost 56% of all investments in equities are held in the United States of America. And there are very specific rules when it comes to investing there, which are kind of have an oversight committee, which is called the SEC, or Securities and Exchange Commission. A key element of that regulation is that they have to approve ETFs, including ones that want to invest in Bitcoin. And until those approvals and clarity on how Bitcoin regulation will look like, a lot of that big money is going to continue to sit on the sidelines or get some moderate exposure to Bitcoin through proxies. Companies that hold Bitcoin in their treasuries instead of cash. Companies like MicroStrategy. But there may be a light at the end of the long Bitcoin ETF tunnel. Just check out this story from CNBC that they published on July 2nd. The SEC should have approved a Bitcoin ETF a long time ago, regulator Pierce says. The article continues to quote the SEC commissioner as saying, "I thought that if we had applied our standards as we have applied them to other products, we would already have approved one or more of them. With each passing day, the rationale that we have used in the past for not approving seems to grow weaker." So, SEC commissioners are getting softer on this topic, and it's just a matter of when at this point, as opposed to if they'll approve a Bitcoin ETF. Now, my detailed prediction on how hedge funds and ETFs will impact the price of Bitcoin. As it stands today, on July 10th, one Bitcoin costs $33,900. How that number is calculated is by Bitcoin's algorithm that determines the price based on changes in supply and demand. As more coins are bought up, the supply of the total 21 million coins goes down and the price subsequently shoots up. The reverse is also true. So, once we know the price of a Bitcoin and check exactly how many Bitcoins are in circulation, it's 18.75 million as of right now, we are then able to determine what the market cap of Bitcoin is, meaning what is the total value of all the Bitcoins that currently exist. And here's an illustration of that. Okay, so as you can see, price of Bitcoin today, $33,900, 18.75 million Bitcoins, giving us a market cap of about $636 billion. And why I bring this up is simple, because based on observed purchases of Bitcoin, which everyone can see on the blockchain, we can make estimations from this point in time of how certain inflows of money impact the total market cap. Please note, these are predictions on how I believe institutional investing from ETFs and hedge funds will impact the price of Bitcoin. I will do a more detailed video soon on how the market adoption rate will impact the price of Bitcoin, so stay tuned for that. So, the story of exactly how purchases impact the price vary depending on who you ask. For the sake of my calculations, I will be showing you both a conservative and aggressive number. The first assumes that the price or the market cap of Bitcoin will increase at a factor of 10 versus the amount that was invested. The second assumes that the market cap of Bitcoin will increase by a factor of 20 of what was invested. I personally prefer to focus on the conservative number myself, as I like to underpromise and overdeliver, but I am showing both here. Okay, so of the total money with hedge funds and ETFs, I estimate that right now about 0.11% is held in Bitcoin. Here's how my estimation breaks down. You can see that we have approximately $8 billion or 0.3% of hedge fund money in Bitcoin, and ETFs at 0.05%, or $3.9 billion due to tighter restrictions in the USA coming from SEC regulations. Full disclosure, I don't include Grayscale's Bitcoin Trust in my numbers because it is not by definition a hedge fund or an ETF, so please keep that in mind when scrutinizing my numbers. And now let's take a look at what would happen to the price of Bitcoin if these funds upped their investment to 1% of their total holdings today. Okay, so as you can see, the impact of, or actually let's start with what the additional investment would be. When we're talking about hedge fund money, if they upped it to 1% of the total money that's held in hedge funds today, you're looking at about a $24 billion incremental investment. How I got that was 1% of all hedge fund money would be about $32 billion. They already have $8 billion in, according to my estimations, so 32 billion minus 8 billion gives us $24 billion. And at a factor of 10, increasing the market cap, that would increase the market cap by $240 billion, which would impact the current Bitcoin price positively by $12,800 per Bitcoin. I hope everybody followed me there. Let's do it again, the same thing with ETF money. We increase ETF investments to 1% of total money in ETFs, which brings the total amount of investments from the $7.7 trillion that are held in ETFs to $77 billion. Which is an additional investment of $73.2 billion, because remember they had a little bit already in there. The impact to Bitcoin's market cap would then be a positive impact of $731.5 billion, increasing Bitcoin's price by an additional $39,000. When we add these numbers together, we are talking about an incremental addition to Bitcoin's price of about $51,813 per Bitcoin. Okay, so when we add that to what the current price of Bitcoin is, that gives us a conservative estimate of $85,713 per Bitcoin. And as you can see, there's a number right under it that shows what it would be if we use the formula that what they invest increases the market cap by a factor of 20x, which would give us a price of $137,527 per Bitcoin. Okay, so I think the 1% case is very probable to happen within the next 18 months. And I'm expecting a major boost to Bitcoin and for people holding it within that period of time. Now, the 2.5% scenario is another very realistic scenario that I think will need about 3 to 5 years to play out, and it looks just like this. You have an additional investment coming from hedge funds at the level of $72 billion. And that is for ETFs almost $189 billion. In total, that will increase Bitcoin's market cap together by $2,607 billion, increasing Bitcoin's total price versus what we are at today by $139,013, giving us a new total Bitcoin price of $172,913 in the conservative scenario. Now, in the more aggressive scenario, we're looking at $311,927 per Bitcoin. Not bad. Now, the last scenario we need to take a look at is the "we need 5% in Bitcoin" scenario, based on what Paul Tudor Jones said recently on CNBC. This scenario is possible, but it is a more long-term scenario. We're talking about 10 years from now, once everyone is comfortable with the idea of holding and storing Bitcoin, and the adoption rate closes in on 80% in the developed countries and around 40% worldwide. Here are those numbers. We're talking about a total market cap impact to Bitcoin of $5,332 billion, increasing the Bitcoin price from today by at least $284,347, meaning that in the conservative scenario, one Bitcoin will cost $318,247. In the more aggressive scenario, you're going to be looking at a Bitcoin that costs $602,593. As you can see, just ETFs and hedge funds by themselves can make major changes to the price of Bitcoin over the next 2 to 10 years. And like I said earlier, it's just a matter of when at this point. So, in conclusion, big time investment fund money is coming to Bitcoin. Alone, this money can increase the price of Bitcoin to above $80,000 in the near term and get it above $600,000 in my more aggressive scenario in the longer term. And this is going to happen. Please remember from my earlier video on inflation, the money supply, here it is, here's the money supply, is growing at an astronomical rate right now. People are looking for a place to park some of their cash as a way to protect it from inflation. And you can be sure that Bitcoin is one of those places. As I mentioned, a lot of these major funds and investors are just waiting for the SEC to give them the green light. And as I illustrated, they are getting closer and closer to doing this as each day passes. That is why I am buying Bitcoin right now, and why I am confident that big returns are coming my way. If you like this video, please drop me a like. It helps get my videos recommended so more people can see this information and prepare better for coming changes. Before I sign off, I wish you all happiness, I wish you all success. See you in the next one.